Would be a very brief presentation because the reason why I'm talking about Caspian and what we do is because it's a very unique organization. Although we are small and in terms of portfolio we may not be great, what we do is are valued very greatly in the market, and that is why I would like to speak on that. And yeah, so are you able to see the screen? If someone could confirm, please.
Yes, sir. Yes, sir. It's visible.
Okay.
Yes,
Okay.
sir, we can able to see screen.
Yeah. So this photograph actually is of one of the success stories of one of our investor companies, which has developed an IoT device or a whole technology solution to track milk that starts from the milk producer and goes up to the factory and beyond that also. So earlier, once the milk is put into these cans and it is on its way to the milk processing unit, there would be no monitoring of what is happening. There could be pilferage, there could be spoilage and other things. But this device that has been developed is able to, in real time, track what happens across the uh, value chain and the logistics that happens around that. So that's the picture about it. So Caspian is a 14-year-old organization. It's not very old. And we are not in the business of, it's an NBFC basically that I'll be talking about. We are not in the high growth, high returns business. So our whole philosophy works around addressing solutions that have social and environmental impact. So social, we talk about in terms of underserved areas, underserved communities, and problems that are of scale. So these are the areas that interest us, whether it's financial services or whether it's education, access to education or access to healthcare. So bottom of the pyramid and underserved communities, these are two things that we look at. And the second thing, of course, is environmental impact. So in everything we do, we try and see that is it having a positive influence on the environment, or at least there is no harm, that we are not damaging the environment in any way through the activities that we finance through our client institutions. So in the next slide, I'll talk about the background of where we started. But although we as a NBFC uh, do debt funding, because we come from the equity space, our approach towards debt funding is also with a equity kind of an approach, which is very unique and rare in the market. And that is, I think, what brings is special about Caspian. And I think some of you who would do a little background check about us with a mere, let's say, under 500 crore of outstanding portfolio, our influence in the market is many times of that. And the way we are respected and the way we are given a lot of visibility in different areas is far higher in proportion to our real role, which is a very minuscule thing. The last four lines, as you can see, it talks about where all we work. Our origin is in the microfinance space, but we also do small business finance, affordable housing, clean energy. Again, I think clean energy is a very fascinating field. So including energy savings, for example, uh, automation of home lighting are areas that we fund. Uh, Waste to energy conversion is another area. Then, of course, electric or let's say mobility is another space that we have funded. So, like that. And in education, of course, we are one of the leaders in terms of financing to education companies. Uh, in the healthcare, again, we are present. Quite a few interesting companies in our portfolio, mostly in terms of other than the normal, medical doctors or hospitals. These are solutions, devices, and other ways in which they solve the healthcare problem. Uh, I think this is a slide which may not be very relevant to you, but we can very proudly say that we are one of the very few companies in India that is certified as a B Corp. And I think as you guys are all students, and depending on your own curiosity, you should really Google and see what a B corporation is. So the B Corp is a what is called a benefit corporation. So it works towards the interest, protecting the interests of all its stakeholders, not just the shareholders. So to us, our funders, our clients, our employees, everyone to us is of value. So we do not try and extract the maximum for ourselves, but to have a fair deal in transacting with all these clients, including our own staff. I think if you go to the website and see, even our office boy would be featured on the website, the last man in the hierarchy. So that is the principle of a benefit corporation, that you are not only adhering to the laws, but going way beyond that in terms of the way you operate your business. And in countries like Europe and the US, such companies get a lot of tax breaks and other benefits. So far in India, these are not there, but we always believe we should be pioneers in such things, and therefore we proudly talk about being a B Corp. Very quickly and briefly, I'll talk about uh, the fund. So Caspian is a fund manager. I think in very simple terms, what is Caspian? It raises funds from investors, India and the globe, and then it deploys those funds in various businesses and ensures returns and returns the money along with the profit that is made to the investors. So that is the whole idea of a fund manager. The unique thing about us is that we do both equity and debt. So very few, I think, funds handle both equity and debt. So the origin of Caspian is in the Bellwether Microfinance Fund. So in the early days of microfinance, capital was required by these companies, because these finance companies, if they want to raise debt, because debt is the raw material and the finished product in microfinance companies, if they need to raise debt, they need capital, they need equity, and that was not very much available in the market. And we were the first, and we can proudly say that we were the first Indian fund to finance to microfinance institutions. Some of those names are visible there, the Ujjivan, Jana Lakshmi, Sonata, Arohan. So we did 12 investments from there and incubated. In fact, some of them had registered offices in our office initially. We gave the promoters the money to start the company and then invested and very successfully exited from all those investments. Now, as these microfinance companies grew, we realized that Bellwether was a early stage incubation fund. So it was not adequate to actually fund as the growth happened. So the India Financial Inclusion Fund is basically taking advantage of the growth and success of these companies to be able to ourselves also make returns. So if we stayed as a small investor and these companies grew and our share in the holding became small, somebody else would really benefit from it, late stage investors. So we set up this fund and we made 12 investments, and we have exited most of these. These are also all in the financial services space. So microfinance, affordable housing companies, SME finance companies, so all these. And I think since you are all students, you will also realize that all companies that we invest in never succeed. So there are always some that need to be wound up, some that need to be written off, some give you returns. So it's a mixed bag of success and failures. But overall, as a fund, you manage your returns. So the ones which give you big success make up for where you lost your money. So I think the reputation that we built in the market is based on the bellwether and the India Financial Inclusion Fund. So Caspian Impact Investment is what largely we're going to be talking about today, which is a NBFC. And this NBFC was set up in 2014, basically because, again, just like the second fund came out of the need from the first fund, there were very few lenders to early stage companies. So you have good companies, professionally managed, large market, they need to grow, but people are not ready to put money into them because banks don't understand. Banks look at debt equity ratios, what security can you offer, and other ways of de-risking their loans. But we believe that new age companies cannot be measured on old metrics. So when there is nothing known about what is their future plans, you can't go by some Excel sheet arithmetic to fund them. Finally, I think the SME Impact Fund is an equity fund that we have. Again, the equity fund, which is called SME Fund, is a offshoot of the Caspian Impact Investment. So as we were funding these companies with the debt, some of those were very attractive opportunities for equity investment, and therefore we have taken equity positions in some of the companies which we have funded for a period of time. So interestingly, again, since you guys are students of finance, uh, as a fund manager, we have to, as per law, keep distance, between the debt and equity. So we cannot mix up equity investment into one company and also give them debt, and then it becomes a kind of a conflict. So if we actually finally put equity into a company, we exit from the debt. So we do not have at the same time simultaneous involvement as both a lender and as an investor, equity investor. Okay, so broadly, I think uh, in a very small way, again, I would just refer to Mr. Veerabhadra. Uh, how does the student community of your institution see Caspian? It's a question. So, as a potential employer or as an institution to study about, I really don't know. But overall, we have a professional team of close to 50 people. The average age of our team would be around 30 years. So it's a full team of young and very enthusiastic people. And that's what is, I think, the asset of the company more than anything else. And large number of partners that we have in our journey. Some of them are mentioned here. Uh, Point to note is clearly, I think, again of interest to you people is that India, has no shortage of capital in terms of money and investment. But if you see this slide, you'll see that most of the money we have raised is from outside, except SIDBI Venture, which is again funded by the DFID, which is the UK aid. So domestic capital doesn't understand precisely the business that we do, and therefore we have to go out and raise money. abroad and use it in India. So coming into the food and agri business, we have funded uh, this figure 24 is a little outdated. We have done about 28 companies. We financed 28 companies in the food and agri space. And the point of interest for you would be that almost 17 of these are companies which are yet to make profit. So I think you guys also, as young people, if you want to buy a motorbike or something and you want to take a loan, the first place to try for a loan would be the state bank. Maybe there you will get it at 9%. Then you may go to Bajaj Finance and other guys who may give you a loan at 15% or something. Even if those don't work, then you have finance companies which will give you a loan at a higher rate. So depending on your meeting the criteria, uh, who is going to lend to you is an issue. So therefore, I think the companies that we lend and we proudly talk about are actually unbankable by the banking system because of various reasons. And some of those being that they are still not profitable. Promoters do not have assets, properties, and other things to provide as security. And to us, those really do not matter as long as the business model is robust. The promoters are committed to the business that they do, they understand the business significantly, and they have a good team in place, and the market in which they're working has good opportunities. So all these other factors we take into account when we actually decide to finance a company. So uh, we also, as I said, since we are a B Corp, the question about uh, what are the metrics we see beyond financial returns. So the metrics see beyond financial returns is how many farmers are covered, how much employment is created, how many women are benefited from it, what is the incremental income that has accrued to the farmers. So these are some metrics that we track in our business. So this is where we are as a market. We do not fund, I think, family businesses. So the typical proprietary concerns, which are family run, which have no proper financial records, maybe making great profits or high turnover, they are not of interest to us. So the first thing we do is to see whether the management is professional. Most of the times we ensure that the governance, the ownership and management are separated. But even if it is not, there is absolute transparency in the way they operate, and they have independent directors on the board, and the reporting to the board is significant. So professional management is the first checklist that we tick. If that doesn't exist, we don't go forward. Fast growing businesses, this is, I think, the critical place where we operate. In 1 year they may be having a turnover of 1 crore, and the next year the turnover may reach 10 crore in the business, because that's how fast they grow. Any SBI or any other bank will say 20% increase in limit. They don't understand high fast growth companies. So many times the businesses we fund already have some bank loans and require money way beyond what the bank can offer. Uh, Broadly, I think the point number 3 about turnover is important. So we are not into early stage companies. So because the money that we borrow is also to be returned with returns to the investors, we cannot risk our money into uh, highly risky enterprises. So there's a minimum level of turnover beyond which only we look at them. And most of the time we look for the presence of equity investors. So if there's an equity investor on the backside, that takes care of the capital cushion that is required for growth of these companies. So the working capital can come as a debt, but the capital required for fixed assets, for manpower, for technology, all these has to come in the form of equity. So if there is an equity investor, it gives us comfort and we do. So why they do not get funded, the right side, I think I'll leave it to you to read at leisure and come back. Why do good businesses not get funding? Is a question or is a mystery that many committees of the government have been formed to answer. Uh, and I have my own views on that, but I would not like to say. But what I can really say is there is need for some 10 or 20 more companies like us to actually solve this problem, and therefore we are not we are not a competition. We always encourage more institutions need to come up in this space because there's enough opportunity for so many more to get credit. So the products we offer is, I think, the core of why we are relevant in the market. We customize. So unlike a list of ready-made products that other lenders may have, we have some basic framework, but every loan that we do is customized to the business requirements. It could be in terms of seasonality, it could be in terms of many other ways that we could uh, design it. Could be disbursement in 10 tranches, repayment in a bullet, uh, part of it as a term loan, partly as a working capital, some of it as receivable finance. So in many ways the structure, this is the core of the whole secret of the business that we do. Because if you give a loan with fixed installments in an agriculture company, it doesn't work because the business is seasonal, and therefore you need to catch the season and match the cash flows of the company. So that is where we are a long way off. Of course, it requires great deal of technology at the back end to be able to do something like a cash credit, which a bank can do. A cash credit is a limit in a bank where you can draw and pay every day depending on what sales you have or when you need the money. An NBFC cannot do that because legally it cannot have a current account and operate like that. So we are working towards that direction to be able to offer a customized product required to the market. So for example, companies with us have grown from, let us say, 40 crore when they came and today are 200 crore. And our loan was, let's say, 10 crore and today it's also still 10 crore. When they have, let's say, HDFC Bank or SBI lending to them, why do they come back to us and still maintain the relationship with us? Is a question I leave to you to consider. Why is it that and to add to that, the SBI loan may be at 12% and the loan from us may be at 16%, but still borrowing from us even when they've grown. So why is that? Think about it. So food and agri business, I think you guys are all FABS, as your short form says. Uh, there are over, I don't know, the website of the government of India and talks about over 1,000 agri startups in the ecosystem doing various sort of things. But effectively, lendable entities are very few. So that is why you see that although we have done about 30 loans, at the moment only about 12 clients we have. And these are some data about disbursements and average loan sizes. So just to give you an idea that, we are interested to do, but there are not enough of those kind of companies which can actually take the kind of loans that we do. So what really happens, let me very briefly say that when you start a business of a new kind, a startup, you can raise equity or you can raise debt or you can raise a mix of the two. Now, equity comes at a cost of diluting your ownership. So, of course, if the company loses, even the investor loses his money. But if the company does well, then the investor will, having a larger holding, gain much more than the promoters of those companies who have actually done all the hard work. So, therefore, our proposition is that borrow money to grow, don't go too much by diluting your own holding. And as you can see, we are just giving an example of how companies that have been borrowing from us have grown over the years, and how through this growth they have been able to get new investors, because as your profitability increases, you will attract more equity capital also, and you will get investors, and the advantages you will get at a better valuation. That means the promoters will get good value for their hard work, and that is where I think we play a significant role. And this is some of those companies that we have funded across the board, as you can see, from organic to banana to producer companies and farm equipment. So uh, I think you guys, if you are in the market, you will know. For example, Shrestha, the first company is called Shrestha, or 24 letter mantra. The company on banana and pomegranates is called INI Farms. The one producing solar pumps is called Ecozen. Uh, Automation Stella Apps is the company which the photo showed you about, which has automated the whole dairy value chain across the chain. So each company is into very unique businesses. Uh, we as lenders have been able to accelerate their growth and been able to make them relevant businesses and scalable businesses. So that is broadly what we do. So I think I'm sure as MBA students for agribusiness, some of you will be looking to be entrepreneurs. Some of you will want to be professionals with companies. So as a kind of experience over the years, typically four, or let's say five companies walk into our office requesting for a loan, only one of them passes the test and gets supported. And four of these do not really become qualified to get our loan for various reasons. And many of these reasons are uh, listed here. Uh, as small businesses, you need to separate company's expenses from your family expenses. So we see crazy kind of things like, since it's a small company, the family's trip to Singapore or somewhere is built to the company and such things. So governance is lacking, systems and procedures don't exist, compliances of regulations is not there. So all these are issues that even from the day one of your business you need to look at. And therefore we when we see the back of these guys whom we can't fund, we feel bad about it, because many of their work and their ideas are great. Only thing is that debt is something which has discipline. If you don't have discipline in your business, if you borrow money, you will be sinking us along with yourself. So therefore we started working with early stage companies. So much beyond just lending to food and agri companies, we work very closely with incubators, we work with startups. We tell them, what do we tell them? What is the right way to do things? How to make your business debt ready. So if you want to borrow money, these are the things you need to do. You need to have a governance, you need to have systems and procedures, you need to get your work audited, comply to the laws of the land. All these are simple, fundamental, basic rules we need not tell. But I think people in India take them for granted, unfortunately. And We work very closely with all the incubators in the agri space, including AIDEA, ICRISAT, and sit down with these companies and work out ways. And we also, whatever little way we can, market connects, uh, team building, or let's say finding suitable human resources for these enterprises. We try and offer our services to kind of evaluate their plans, business plans, strategy level, not Excel sheets. Excel sheets we don't believe in actually. Even in the loans that we do, Excel sheets are basically arithmetic. You can always fool around with numbers and show something is which has no sense. So that is how we work very closely with the ecosystem. We believe that after microfinance, food and agriculture has the capability of making huge impact on a large number of people, and therefore it is of interest to us, and that is where we are. Okay, so food and agri sector, we are in the process of raising another fund. Basically, I think there are, as I said, close to 1,000 companies, uh, startups. Companies are many more, of course, but agri startups in the business. And in our view, there are large numbers which are not funded by equity adequately or funded in time, struggling to grow. So we are setting up a small equity fund which would be making early stage investments into startups in the agri space. And these are some of the challenges we have in that space. The model, of 3 to 5 years. So typically, a venture capital company would like to invest in year one, year two, and then in 3 to 5 years, they want to exit either by selling out to another investor or by taking the company to the market. The agri space doesn't offer that kind of growth. So agri requires patience. In our view, it takes 7 to 10 years for an agri company to grow. Even someone like Shrestha, which is right here in Hyderabad, and he must be Selvam, he must be coming and speaking to you also. He can tell you how a big struggle it is to take it to where it is till today. Uh, Technology, again, this is an interesting thing. I would like to say that every guy who is bored of doing a software job thinks he can develop an app sitting in his room and then solve the problem of agriculture. So we believe that technology is just an enabler and a part of the solution, but a pure tech solution will never work. And that is where I think point four, that in over 1,000 companies that are there, I would like someone of you to list how many of those have promoters who are from agriculture. Unfortunately, I think less than 10% of the ag techs are really promoted by agri graduates for whatever reasons which we don't know. But because it is non-agri guys who are doing this, they also have a different way of looking at things. So the historical way of looking at problems and solutions, or the Swaminathan way of looking at problems and solutions, is outdated. So these guys bring a new perspective, and that is good. But they try and feel that they can solve everything, that they're Superman, which is crazy. Perishable business, I think another area. I really don't know, uh, who are the people who come and speak to you. Uh, Ninja Cart, Way Cool, all these are big names in the agri value chain business. In our view, none of these are going to be around for quite long. They are losing money for every kilo of fruit or vegetable they sell. They lose, I think, 30 paisa per a rupee. So these models are not, have never proven to be successful. We don't know what will be the right solution, but perishables business has not been a great success, but it's talked about a lot of, and there's scope for things to be done. Farmer Connect is the key of everything. I think 13 crore or 14 crore, there is some number of farmer households in the country. uh, None of these ag tech companies have been able to bring direct connect to the farmers. So even if they talk about lakhs of farmers and all that, basically they are going through intermediary structures. So farmer producer companies and others maybe an option to reach functionally. But someone like us, we believe that any startup which has direct connect with the farmers is of greater interest to us than somebody who's just doing purchase and sale of commodities through an intermediary or a trader. So that broadly is the lessons learned. And with that, we are at 40 minutes past 2. Broadly, I think I spoke my mind and thoughts. Look forward to hearing what questions you have. This is just, a little bit about what we do. Anything else, if I can respond, I will do. If I can't respond, but it's still relevant to me, I'll get back to you. It's been a pleasure speaking. It's been a one-way communication. I can't see you guys face to face, but sometime in the future, I'll drop by and meet all of you at your college. So I'm now done with my presentation. Open to Veerabhadra and team to take the next steps. Thank you so much.
Thank you so much, sir. This is
Thank you,
Krishna
sir.
here.
Yeah.
Yeah, Krishna here, sir. There are a few queries that I have.
Sure.
One is that
So Krishna,
you mentioned that.
let me just ask Krishna, what are you in this institution in the FABS?
So yes, sir, I'm working as a programs manager, and Veerbhadra basically reports to me. And,
Okay. Yeah, so we'll
So-
certainly take your questions, no doubt. We'll also take some students' questions. Yeah, first after you're done.
So
Sure.
actually, so basically, sir, I have received the. So we had basically asked the students to send their queries beforehand.
Sure.
So we have questions written by students basically sent to us.
Fine.
And in addition to that, the kind of questions that they raised and the kind of presentation that you have given, there are a few add-on questions. That's it.
Sure.
There are just 3-4 questions.
Oh, no problem.
So one question that a lot of students have basically asked is what does basically Caspian do for the farmers of India, which you have actually stated in your presentation. But there was one question like, does Caspian work directly with farmers? That's one question that at least 4 of the students have asked. Would you like to answer that?
Yeah, very good question. We do not work directly with farmers. We are what is called a wholesale lender. So we lend to institutions that work with clients. So that is how we are. We are a wholesale lender, and therefore we do, of course, do a lot of monitoring, visits to the field, but we are not a direct lender. First question, if you could just repeat, please.
Hello. That was one question. Yes.
The first question, if you could repeat, I'll just elaborate that also.
No, so basically, they had asked because many were hearing Caspian for the first time. So they had asked about the business model of Caspian and how basically it works for the food and agribusiness sector, which you have actually stated in your presentation. That is what you had actually talked about.
Sure.
So
let me
there are few.
Let me just complete that to say we are really small and we don't make great claims about what we are doing, but what we do is to find these companies which have solutions that can be taken to scale. For example, let's say Stellapse. Stellapse is transforming the dairy sector, and through reduction in losses, spoilage, and many other things, it is easily possible to calculate how much incremental returns dairy farmers have got because of this solution. Similarly, Ecozen, another company, has developed a dual solar cum electric powered cold storages, which are decentralized, which can be taken and installed close to the farmer level. And through that, you can aggregate produce, you can reduce spoilage, and there are many other benefits like that. And all these are solutions which are scalable. So that is where I think we believe we have put our money on things that are able to solve problems for small farmers, and thereby provide greater returns to them. So in that limited way, we don't make much bigger claims than that. Yeah, please go ahead, Krishna.
So there's one more question that has just come up. So how like you did mention that of the 28 30 companies, there is one FPO also. I saw that in your presentation. There's one
Yeah.
question: how has Caspian's experience been with farmer producer organizations? And yeah, so that's the question.
Okay. Okay. Oh, who asked this question? If I can just, you don't have a. So this is a very, very interesting question actually. Initially, when we started this debt company, one of the uh, strategic kind of objectives by us was to lend to FPOs. But we realized very quickly that FPO is a very, very complex space to operate in. The problems are many, and you guys know about it. It's a subject which requires time by itself. Right from farmers not being convinced about how an FPO can give them better returns, to absence of CEOs or CEOs who are poorly qualified, promoting institutions coming from an NGO background who don't understand business, capital of FPOs being small, so they cannot raise capital outside of farmers, seasonality in businesses, uh, volatility in the produce prices. All these are limitations that make it difficult to lend to an FPO. We have lent to about five FPOs so far, and I think one that was mentioned there is what is called Chetna Organic, and it's one of the large FPOs based in Hyderabad. Works in works in Adilabad, works in across the border in Maharashtra and in Orissa. And I think they do very interesting work. And since you guys are a Agri Business institution, you should call them over sometime and ask them to speak about their work. So what they do is they produce organic cotton, which is supplied to fabric makers in Europe and to all the large fashion brands in Europe, Sweden, Japan, and the US. So they are into organic cotton production, and that is where they are. Their turnover is close to around 20 to 25 crores. Still, cotton is a very volatile commodity, and I think they got loans from banks. The interesting part from our side is, as you can say, when they have reached a turnover of 20 crore, why are they still borrowing from us at 16%? When a bank can give them a loan at 12 or 9%. So that's a question I think if somebody is curious as a student to ask, should inquire into and try to understand. So FPOs has been a very challenging space. FPOs requires technology actually at the back end. Typically require loans of 5 to 10 lakhs for a few days, carefully monitored. We can't do that. So as wholesale lenders, we are not cut out to do that. Samunati, again, I think you guys would certainly interact with Samunati at some point of time. Samunati is trying to offer that kind of a retail solution for FPOs. We are available for FPO financing. We have financed recently one Madhya Pradesh poultry federation, which lost lot of money because of some rumors about poultry meat causing spread of COVID, and they came back to us for working capital. We lent to them. So socially relevant, professionally managed, well operated producer enterprises we can finance, but experience has not been great. Yeah.
Thank you, sir. One Yeshala Hilashri. So
Hmm.
she has asked a query in the chat box. How does Caspian interact with other companies? I don't know exactly what she wants to know.
If
Yeshala,
you, yeah, you can ask her to elaborate if.
Yeshala, are you there? Yeshala, can you ask exactly what you want to know?
So actually, how does Caspian will interact with another companies to implement their ideas, or how do they expand their businesses? That's it. I want to know that. Sir.
Okay, okay. So, a typical due diligence by Caspian is very, very intense. So we spend considerable amount of time. As even if we are lending a loan for 6 months to a company, we will study it as if we are putting an equity investment into it. So we'll understand the sector, we will understand competition, the business. Basically, because I think we are not lenders. Technically, we are a NBFC, but if we the loan requirement is for 1 year, we don't enter into it. We believe that we have to work together with that company for at least 5 years and grow together. So the model that we believe in is growing together, and therefore we get into very, very minute details about what is happening, and then based on that we do a diagnostics of what are the deficiencies in that company. For example, uh, the one in Patna, there's a company in Patna, Dehat, which I think again is a kind of showcase company, Dehat. And we 3 years ago, 4 years ago, we did a due diligence of that company, and we found they were not fit for being funded. Today, Omnivore and others have invested. USAID has, if you look up, it's one of the most talked about enterprises. So when we looked at that company, we gave them a list of things and said, these are all the areas that you have deficiencies. We are not able to give you a loan, but if you address these deficiencies, we can look at you 1 year, 2 years down the road. And for the benefit of the company, they actually seriously, instead of kind of saying, who are you? And instead of giving a loan, you're giving a list of things to do. To the credit of them, they took those things seriously, addressed those issues, and today they are one of the largest, I think, in the agri supply chain companies, and with a great future. Uh, all said and done, we didn't give a loan, nor did we take an equity stake in that. But we feel proud that we could contribute towards building that company. So that is how we engage with these enterprises.
Sir, I would just like to add one thing here that when we shared about your talk on our social media, so
Hmm.
Mr. N.V. Ramana, who is the advisor to Samunati, so
Hmm.
he had told that this talk would be of very much use to everyone, to students,
I
because
I
you are
hope it is. Ramana Garu is just
no, because he cleared
exaggerated. Yeah.
no because
Yeah.
Ramana sir is actually now a member of our academic council. He's
Hmm.
a member of our academic council, and we have recently signed an MOU with Samunati Foundation to
Hmm.
support
Hmm.
future training programs. So
Sure.
just wanted to add that.
Good. Yeah.
Uh, One more thing. So there are so most of our students, like almost
Hello.
90% of the student. Hello, am I
Hmm.
audible, sir?
Yes. Yes, you are.
Yeah. So
Some.
90% of the students have asked
Hmm.
about what basically there are a lot of startups that you mentioned about, and there are a lot of startups coming up in the entire FAB, food and
Hmm.
agribusiness sector. So
Hmm.
what kind of opportunities are there in the food and agribusiness startup sector?
Hmm.
Because most of the students, they think very traditionally, that they
Hmm.
only look at traditional seed companies, traditional input companies, but they are
Hmm.
not looking at the startup space the way they look at these traditional companies. So what kind of opportunities are there in the entire startup space,
Very
and what kind of and what should the students change in their attitude, not just attitude, but in their skill set also, to be part of such startup space?
right. So that's a very interesting question that you have raised. And I think just to give a little context to that, uh, our food, which is our own Hyderabad based startup, was looking for professionals for their team. And then I connected your institution, and some of them joined there also, I think. So the idea that startups require MBAs from IIMs is a myth. Uh, they require people like you guys in very large numbers. So the thing is, these guys, the take home pay, very literally, since I have been involved in the post COVID placement crisis, trying to find opportunities for professionals in agri startups, I can tell you that the expectations of guys from IIM, IRMA, and others is some 10 lakhs, 12 lakhs package, has today fallen to something like 6 lakhs. So uh, that is where it is. So they have, EMIs. Typically, these guys are carrying an EMI of something like 12,000 per month that they have to pay to the bank. And therefore, their struggle is to get jobs where they can survive and pay these EMIs and all this. So that is the whole dilemma in the market. Uh, People like you guys, what is required. One is an understanding of the ground realities, a willingness to work in the field. Second thing, good communication skills. Okay. Being able to work in unstructured situations. So, you go to a seed company or a fertilizer company, everything is written down there. So, your role is very well defined. In startups, your role is undefined. You will have to do everything. One of the guys, like uh, around 15 guys who got displaced from my alma mater, from where your director KV, who was my classmate, we were batchmates. 15 guys who were holding offers from MFIs and other financial services lost their jobs. And then we went around looking for them for placement in the agri business space. And some of the companies, for example, one company in Madhya Pradesh has said, okay, now you go and open a branch in Jaipur. Now, if if you had worked with, let us say, ITC or some other Nagarjuna, you will know what is a branch, what are the rules, how to register a branch. Now, right out of college, you are expected to go and set up a branch. You have to say, sorry, I don't know this, or you say, okay, let me take a chance and let me do this. So those are the two options you have. And it's a big challenge and a risk, no doubt. So are you ready for those kind of challenges of working in situations which are unknown? Is a question for you to take. If you grow with companies like these, the benefits will be great. Like typically, including I think the driver or the peons in Infosys became millionaires. Those who were in the early years. So like that, if you get into companies in the early years and you become part of the management, you will also very strongly gain on the upside in terms of both monetary benefits, because many of these companies have a sweat equity and other ways of compensating. They'll say our uh, revenue or our income is not adequate to pay you today, but if you stick around with me for 3 years, a part of the profit I'll share with you. So are you ready for those kind of structures is a question that I ask. Another thing I think interestingly, again, although you guys may put this on YouTube and it's a public talk, people have left, and I know this for sure, have left large agri startups and joined smaller agri startups at a 50% salary cut. Recently, I can tell you, and not small, at least 5 to 6 that I know of. And why did they leave? Why did they leave? Because of the work pressure and the work culture. The culture of behavior towards your subordinates and the pressure of growth and trying to uh, build the top line, which is again created by an aggression of the investors, is something everybody can't cope with. So therefore, I think you need to look for other opportunities. The flip side of this, I think the other side of this is if things were all right and the economy was doing well, you guys had a place. Guys like Vamnicom, you guys. There's a second level of professionals that are required, which these startups would have easily picked you up. Unfortunately, today, the guys like Irma or Niam and other guys are also ready to work for the package at which you guys also would get. So, really, now there has to be a competition on professional capabilities. So, ultimately, I think self confidence, how you present yourself, your communication skills, your skills, because the guy who went out to set up the branch in Jaipur, he told me that everything was fine, but the biggest difficulty was of having to manage with the transporters. So are you able to negotiate with transporters? They're dirtiest fellows to work with. So it requires experience. If you see a senior who has done it, you can learn a few tricks. If you are trying to do it without having experience, it's a different thing. So these are all the things. I think it's a game of adventure, which is not for everybody. So some of you should take it up. Uh, the last point I would like to make is it's good to go in teams of 2 and 3 because there'll be lots of frustrations, failures. If you're all alone, you could get into a depression. So if you have 2 3 people around, you will always be able to be sharing this and working on it together. You will also become co-owners of these businesses. So basically, if there are just 5 people and you are two of them, you also begin to behave and believe that you are owners of the company and your stake in success is so much that you will do extraordinary work. So that is, I think, my view on Actex. Tremendous opportunities. Please look up. Please look at the company. What is its business? Talk to the other employees in that company. Do a lot of background check. But I think a lot of exciting career opportunities out there for you guys. Right.